We always keep a considerable amount of money in cash that we might need on any given notice. Or maybe we have that money not converted into assets because we are undecided of why and how we should be utilising our cash. In this video, we will be presenting you 5 assets that are proven to be better than cash, and how these assets are going to be equivalent to having cash, as you will be able to sell these assets to get hands-on cash and might be a true replacement to cash. People having tons of cash are usually investors and they park their money in the right investments. Maybe they will be investing in a Silicon Valley startup. But on average, common people make their money rest in their bank accounts for a considerable time. For example, if you are planning to buy a home by savings, instead of a mortgage, then you will be saving money for a little longer period, let's say for 3 years. And cash evaporates. And now it is evaporating at even faster rates, similar to the way liquids, like water, evaporate due to high inflation rates. The only benefit of having cash is that it is readily available to us. Whenever we need it, we can use it, and we are risk-free in that we will not lose any of it. If an asset provides a combination of these benefits to us, it is indeed better than having cash, and we should consider replacing our cash with other assets, as the value of cash depreciates and we lose money every year, with the roughly 7% interest rate that we are experiencing. But on the other hand, the following listed assets are likely going to appreciate and more or less are going to be like having cash that pays back more cash. Dividend stocks. Stocks are good investments, but when we compare dividend stocks with growth stocks, dividend stocks can sometimes be better. To understand, we have to appreciate how the trading markets work. If the price of a particular asset is determined by its demand, like cryptocurrencies, then they are going to remain volatile, and you can lose all of your savings in it. But in the case of stocks, yes, the market depends on how the company performs, but in the case of some of the big names in the market, the price is still determined by the fact that more people are buying it. Demand has increased, and the price of such stocks will drop back when people will lose hope in the stock. For example, if we have a look at the stock price of Tesla, we will be able to see 3 spikes. And recently, in just 4 days, the stock price rose by 30%, which is insane, and why we should consider not buying it. But wait, also have a look at the recent 2 spikes. This third peak is going to fall too. Similar to the case of the GameStop stock price chart, which will interest you, the price of the stock rose by 16 times when in January 2021 the company announced that they will be selling online too. But the price dropped back 16 times in a matter of a few days. On the other hand, dividend stocks may grow slower, but their growth is never fueled by demand. Instead, it is fueled by the performance of the company, giving a dividend to attract investors. But make sure to consider investing in stocks that have a great record of giving dividends in the past 20 years. Buying gold. No matter what happens, the price of gold could increase, even in an economic recession, war, or any crisis, you name it. Gold provides a good hedge against inflation too. It will be more convenient for you to buy gold as ETFs, since they replicate the price of the gold. Instead of physically buying gold and then holding it, you will be able to sell gold or silver even faster than if you had it physically. And you can do whatever you were able to do with the cash. You might not find gold as lucrative as other assets, but you need to look for the type of investment that meets your criteria. Gold could be a good idea, but especially in smaller period investments. The appreciation in the price of gold is not convenient, but so far could be a safe asset to hold, especially if you are not good with investing. If you need detailed insights and education on how you should be managing your money, then you should subscribe to our channel, as we will bring more videos which will serve the same purpose. So make sure your notifications are turned on by hitting that bell icon so you get the right video at the right time. If you are interested in help regarding your particular financial situation, please seek out a financial advisor. Real estate investment trusts. Buying real estate by yourself and then managing it makes it a business, even though it can be considered passive income, and it is truly not a replacement for cash. There is a hustle involved on some level, repairing the real estate, then setting it on rent, and then selling it at the moment when you need cash is not as easy, unlike REITs. The good thing is that real estate investment trusts can be traded as you would be trading stocks, and at the same time, your money will be used to buy the real estate and you will get payouts, and can even sell it at the moment when you need some cash. The management companies manage all the stuff. Also, you will not need to worry about depreciation, as you would fear in the case of stocks. Hence, you should consider replacing some of your cash with virtual real estate right now. Certificates of deposits. The easiest way of employing your cash at the right place would be depositing them in the bank's depository certificates. You will not need to worry about selecting the right asset, and there is almost zero level of risk involved. Also, you will not need to move your money out of the account. Instead, convert it into these certificates. Although these certificates are not going to give you back huge returns, they may be the fastest way of converting your cash into an asset. Bonds. Well, bonds are not the dearest investment to most investors, as the annual returns are not as lucrative, but they may be the perfect choice when you have large investments and want to quickly convert them into an asset. Most bonds are owned by large investors. Even when countries are planning to invest in an asset, they may prefer bonds. China owns US bonds worth $1 trillion, and countries like UK and Germany hold a large number of US bonds. Because it is the safest investment out there, at least until the US government goes bankrupt, there is a very slim chance that you will lose any money, which makes it a great choice to trade your cash with. Also, bonds provide a hedge against inflation. Assets like cryptocurrencies are also sought to be a replacement for cash, but they are volatile and should not serve as a replacement for cash. Buying physical real estate or buying a business at the same time could become a passive business, but we worked on presenting you the assets which are replacements for cash. If you liked this video, please hit the like button to support us and stay tuned for more amazing videos by subscribing.